What's up, stock fans? Hold on to your hats because NIO's stock took a little hit today, but don't panic just yet. The stock dropped nearly 7% in early trading as traders cashed in their recent gains. It's always a bit of a roller coaster with stocks like NIO, right? But here's the kicker. Wall Street analysts are still holding strong with a $12 price target for the stock. So while today's pullback might be a bummer for some, the bigger picture is still looking pretty solid. Here's what went down today. The stock opened at $7.37, but by 3:30 p.m. it dropped to $6.80, losing nearly 7% of its value. Now, this wasn't a huge shock to anyone. It's just profit taking after the recent surge. NIO's stock had been riding high, so it makes sense some traders would cash out. The key level to watch here is $7. That's a critical support point. If the stock can stay above that $7 mark, we could see it bounce back toward the $8 resistance zone where it hit highs just last week. But here's something that raised eyebrows. Over 10 million NIO shares were shorted today alone. That's a serious move from the bears, whether it's a fear of overvaluation or just momentum traders piling on. That kind of short volume adds fuel to the fire and possibly sets the stage for a short squeeze if bulls regain control. Still, don't let this dip fool you. This pullback feels more like a healthy breather than a full-on trend reversal. As one market expert put it, the path to $12 is still alive and well, even with the selling pressure we're seeing today. So why do analysts still love NIO even after this dip? Well, for starters, there's some serious institutional backing. Bank of America has raised their price target on NIO twice in just 3 weeks. That's no small thing. It shows confidence in the company's future, and on top of that, NIO's delivery numbers have been looking better, signaling that they're on track with their recovery. But it's not just about NIO's numbers. There's a bigger picture here. The adoption of electric vehicles in China is accelerating, and globally, the push toward electrification is picking up speed. NIO is right at the center of these mega trends, which gives it a lot of growth potential in the coming years. Now, what's the road to that $12 target look like? Sure, we might see some more choppy trading in the short term, because that's just how these stocks move. But if NIO can hold above that crucial $7 support, the technical setup points toward a potential move toward the $9 to $10 range. Once it hits that zone, the $12 target doesn't seem so far off, does it? For long-term investors, today's dip could actually be an opportunity. Sometimes the market gives you the perfect entry point right when you least expect it. And if those 10 million shorted shares end up backfiring, well, that could just supercharge the next rally. And that's a wrap for today's update. If you enjoyed the video, don't forget to hit that like button, subscribe to the channel, and drop a comment below. Let me know what you think about NIO's future, and if you're buying the dip, catch you in the next one.